So, of course, we saw losses in the New York session and further pressure in the Asian trading as well.
Yeah, it looks like we're starting a fourth session down in the Asian trading, but so many analysts are saying this latest news actually tightens the market. You know, OPEC slashed its demand forecast and therefore the amount of oil it needs to pump for the coming months. Big news just last week was OPEC's decision to reduce output targets by 2 million barrels a day, actually 1 million effectively when you consider in that OPEC is having problems reaching its targets. But many analysts are saying their action today to slash the demand forecast, the amount of oil they need to pump by 440 barrels a day, and then slash estimates for global demand growth by more than twice that, all a retroactive or after the fact way of justifying what they already did. They already cut the production. Take a look at price action. Meanwhile, early trading saw traders in the New York session react to the PPI, that key U.S. inflation metric, came in much greater than expected. That helped push prices down. WTI at one point down more than 3%, settled with an 87 handle. Brent futures were also down almost 3% intraday, settled just above the $92 mark. But meanwhile, the U.S., which needs to fill the gap created by the OPEC plus reduction, cut back its 2023 supply and demand estimates. Look at the chart on the right. You see a slight differential. That's the cut. But the big issue right now, according to, again, Capital's John Kilduff, is pointing out an aspect that is still bullish for oil prices, is that meaningful loss of Russian supplies, especially when we count down to the December 5th deadline. That's what's getting everybody kind of spooked. PIMCO is warning that Russian oil output could be harder hit by escalating EU sanctions. And meanwhile, we've got Russia's President Putin condemning the gas pipeline leaks as an act of terror, saying energy infrastructure in the world is at risk. But the big focus is, will Russia retaliate against the European nations when they impose sanctions by cutting further the amount of oil?